Hi. This is a second part to house trade daily bias. I did a video on my trade for AUDUSD for Monday, April 14th, I think, and this is like a sequel to that one. You can definitely go check that one out if you want to, but I pretty much will cover the same concepts here for this currency pair USDJPY. What I did was I pretty much came to um, so this is I pretty much would look at like the previous days. So this is Thursday, this is Wednesday, um, Thursday, or this is Thursday, Friday, and Monday. So price was already showing very strong very strong bearish movement, and it traded all the way down to this point. But what we noticed was that price didn't quite hit sell side liquidity from last year, which sits around this point here. So we kind of marked that out. If you can look at the data, that's around September 2024 last year. So this is the candle for Friday. So we saw the price didn't quite trade into that sell side. So before this candle was formed, we were pretty much waiting for, we were pretty much waiting, we pretty much expected that price was going to try to trade all the way down here, barring any fundamental or news or whatever it is, and none of that, at least based on trading calendar, was showing on Forex.com or Forex Factory wasn't showing any major news. So here we are. We're expecting with the same strong bearish movement 2 previous days. So we're expecting that, and we saw the price trade to this point didn't quite hit the sell side. So as we came into this Monday trading day, we expected price to trade into this part, so into this sell side liquidity. So pretty much we had a bearish bias coming into the day. So as we go down to the lower time frame, we're looking for every reason to go um, bearish. So here, what then happened was price before going bearish traded into this buy side liquidity that was resting above this point. And you can see it taps very nicely into it, and then started coming trading back down. As it traded back down, we saw a market structure shift somewhere around there. I'm just going to delete these. Actually, I want to use that to explain something. So a market structure shift somewhere around there. So as it did that on this particular trade, I should wait for this for a fair value gap to form, where this fair value gap would sit somewhere there, right? And then after the market structure shift, a fair value gap is formed, price bleeds down, comes back to retest before we then start to trade downwards. Normally that's what I should have done, but the moment I had the moment this candle closed, in this area, I entered a trade immediately and rode that trade for I think it was a 1-to-1 or so, a 1 to 1.5. I can't quite remember now. But that's another example of looking trading daily bias. Is that, like I said earlier, we looked at the previous days. That was Thursday, Friday, very strong bearish move. We saw the price traded to this point. It didn't quite trade into the sell side liquidity. So we expected, as we're coming into Monday, that price was going to attempt to trade into it. So that's kind of why we're looking for a bearish move. And then what happened after that was we then looked for an opportunity to enter the trade. So here we are. Price traded into this liquidity area here, and then started bleeding all the way down. We've got a market structure shift, which we entered a trade. We wrote that for a 1-to-1 or a 1 to 1.5. I can't remember. I didn't hold the trade all the way down. But again, this is another example of how you trade daily bias. You go into the You go into the charts, look at your daily candles, what the last previous days, what has the trend been like. Sometimes it wouldn't give you very clear bullish or very clear, bearish movements. In some of in those cases, you just wait. I think that's a challenge that we all have as traders. Sometimes, especially when we're starting out, is we want to trade every day, and I don't think that that's like the smartest thing to do. If there is no real clear opportunity, there's no need to do that. This is also another reason why initially when I started my trading journey, I used to think that I would stick to one currency pair, which works for a lot of people. But I also saw that what that meant was, if that currency pair did not present a trading opportunity, it meant that I wouldn't trade. So now I compare multiple instruments. If you look at my bookmark here, I look at a few different instruments that, based on what's happening there, I can then, if anyone that shows me a very strong trade idea, I can then look at that. So let me go into my calendar, into this my trade journal. Now, so April 14th, USDJPY, bearish. Price has been showing strong bearish strength since the beginning of the year, actually. Price is yet to trade into relatively poor lows on the daily time frame. That's what I was showing you earlier. So I'm expecting price to trade into those lows before rejection or continuing lower. In executing the trade, I entered a trade right after a bearish market structure shift. This was risky, as ideally I should probably wait for, I should not even probably, I should wait for a fair value gap in the same direction before entry. However, I'm quite positive for the trade to play out as I called it, and it did play out for a 1-to-1. I hope that this was another. I mean, obviously, this was another example of trading daily bias. I hope this helps someone out there. I'm just starting my own journey as well with trading, and I hope that you learned a thing or two from this. I'll see you in the next one.